Welcome back to the Markets in Focus webinar. I'm Razan Hilal, Market Analyst with Forex.com. Today is April 21st, 2026. I'm going to run this 1 minute disclaimer in the background before we go over key charts on my radar amid the swinging headlines and amid the uncertainty over the Strait of Hormuz and the Middle East conflict. And as we've seen the past 2 weeks, price action is still proving itself as one of the most reliable leaders in the markets, and headlines are also proving themselves as lagging. So we can see lots of key indicators and technical signals that confirm way ahead of a certain price surge or of a certain headline that can help us in navigating the market noise and better manage our risks. So we'll go over the key charts once again from Bitcoin, the US dollar index, crude oil, of course, precious metals, gold and silver, and NASDAQ as it is standing out among the US indices. So, as I mentioned, I'll be starting with the Bitcoin chart. And as a quick recap for the Bitcoin chart, we had this bullish setup since its a sharp rebound from the lows of February 2026 near the 60,000 zone. Now, this level aligns with the golden 618 Fibonacci retracement of the uptrend between 2022 and 2025. And it also aligns with the highs of 2021, previous resistance turned into support, and also aligns with a rebound of the momentum, the RSI, the weekly RSI, from oversold levels last seen in 2022 when Bitcoin was just near the 15,000 mark, which is overall strengthening the case for a bullish rebound over here. And also we have short-term higher lows. And if we drop down to the daily time frame, we can see that price action is contained within an uptrending parallel channel that can be a possible flag pattern, possibly opening the way for another leg lower before that long-term signal can come into play. And we can also see the overbought signals on the daily time frame alongside the market's hesitation at the current moment as of April 21st before any deadline or any new outcomes with the negotiations between the US and Iran, and of course, with anything related to the opening or the closing of the Strait of Hormuz. So over here, the key level that we're watching for the Bitcoin chart, it was 76. Now I shifted it slightly to the 78,000 mark to confirm a clear breakout beyond the bounds of this channel, and also to confirm the other leg higher given the daily time frames overbought signals, potentially signaling for another short-term drawdown. So a clean hold above the 78,000 mark is likely to extend bullish forecasts all the way back to that previous bearish wedge pattern that extended on the charts between November 25 and January 2026. So we'd likely be targeting the 86,000 to the 90,000 mark first. A clean hold above this mark is likely to open the way back towards the 100,000, the 115, and the 130 before opening the way towards a new records on the Bitcoin chart towards the 150 and the 200,000 dollar threshold as we have increasing favorable regulatory frameworks across the globe for the cryptocurrency markets. Now, from the downside, should we have another close below the 60,000 mark, we can be expecting another leg lower before having that long-term bullish forecast reinforcing itself on the Bitcoin chart with key levels inside between the 58,000, 56,000, and the 48,000, lining with the lows of August 2024. This is the outlook for the Bitcoin chart. The key takeaway here is that we're on a bullish hold, still cautious below the 78,000 mark as we still have ongoing uncertainty with respect to the Strait of Hormuz. Next up, we have the crude oil chart. I'm going to jump up to the 2 week time frame just to minimize the noise. We still have the same setup. The setup that I have over here is differentiating between the long-term bullish zone, the medium, the neutral to bullish zone, and the long-term bearish zone with long-term key levels on the chart here. So the bullish zone is separated above or can be seen above the highs of 2023, above the 93 to the $88 zone, which opened the way towards the $120 per barrel. Now, price action is currently holding below the zone, which represents the market's optimism towards a near-term resolution for the Strait of Hormuz and the Middle East conflict. And price action holding below the zone also reinforces the neutral to bullish outlook, and it's not a steep bullish outlook anymore from here, and that is below the $88 zone. We're still rebounding or recording a steep rebound above the 76 to the $74 zone, which is the upper barrier of the bearish scenario, and also aligns with the highs of last year's Middle East conflict that also involved the US, Israel, and Iran. So as long as we're above the zone, we're still in a neutral to bullish forecast or scenarios for crude oil charts. A clean breakdown below the 76 to the $74 zone can possibly promote another leg lower or reinforce another leg lower. Now, if you look at the 2 week time frame, this looks as like a potential double top pattern over here. If we drop down to the daily time frame, it looks like a potential head and shoulders pattern reaching the $76, which is midway. A clean breakdown below 76 and 74 would uh, reinforce another leg lower towards its full target potential near the $67 zone, which is a critical trend line and a previous support and resistance to price action since at least 2019 on the charts. So we can either have another bullish rebound from this level or extend a long-term bearish consolidation forecast on the crude oil chart, possibly aligning with the Trump administration's agenda and unwinding global inflation pressures and expectations. On the upside, should crude oil climb back above this critical barrier, above the 88 to the $93 zone and close there, we can possibly revisit the $100 threshold first and the 115-second before confirming another record surge towards the 135 and the 157 zones. And these levels are derived using the Fibonacci extension tool placed between the lows of 2020 minus the extended volatility, the highs of 2022 also minus the extended volatility, and the lows of 2025, where we can see that the rejection this year was from the golden 618, and the next levels up are near the 136 and the 157, aligning with the 786 and the 100% Fibonacci extension ratios. That is for the crude oil chart. Next up, we have the dollar back to the monthly time frame with the DXY. As the old saying goes, the trend is your friend, and it's going to remain this way. We're still going to have this bullish hold of an outlook for the DXY until we see a clear breakdown below this respected 18-year uptrending channel since the lows of the financial crisis since 2008. So the critical support zone here is between 95 and 97. A clean breakdown below the 95 can possibly extend a bearish forecast on the DXY towards 2021 lows, promoting extended gains across global currencies and precious metals, and possibly reinforcing the narrative of the de-dollarization or diversification away from the US dollar as a reserve. Now, from the upside, as we hold within this bullish channel, a clean hold above the 100.60 mark, which was a previous support and resistance to price action since February 2023, can promote a steep surge for the DXY in line with this broader uptrend, possibly also promoting extended drawdowns across global currencies and precious metals. Speaking of precious metals, we're going to jump next to the gold chart. Now, if you look closely at the gold chart from a monthly time frame, we do see a very significant bearish engulfing pattern, which um, is leaning towards corrective risks for the gold chart. And if you look at the daily time frame, we can see a similar pattern or a similar hold, which I called it a hold near a cliff's edge for both gold and silver, similar to the rebound that happened from the lows of February 2026, which was followed by a trend line connecting consecutive higher lows. Then we broke down below this trend line. We were hanging on a cliff, which gave way towards a steep drawdown. Now, if you look at the rebound from the lows of March 2026, it's also a similar price action and a similar pattern where the price action is now holding below the bounds of this trend line, which I'm currently also calling a cliff's edge, where we need a clean close below the 4,760 to be able to promote another leg lower, possibly going another 100 points down towards the 4,660 and then another 100 points down towards the 4,550 zone. This can be a strong support. If not, we can extend drawdowns towards the yearly lows with key support levels in sight between 4,440, 4,300 and the 4,170 for either another bullish rebound or an extended bearish scenario for gold prices back towards the 3,000 zone, with the key popular zones in sight with global market consensus near the 3,700, 3,500, and 3,000 respectively. Now, from the upside, gold is currently pressured below the 4,880, and the clean hold above this level is likely to reinforce bullish expectations near the 5,000 barrier or the 4,980 to be precise. And the clean hold above the zone is likely to reinforce expectations towards a 5,250 resistance before opening the way back to forecasts to revisit the 5,600 record and new records near the 6,000 threshold. This is for gold. If we drop next, also it's important to look at the patterns on the RSI as much as looking at the patterns on the charts, where head and shoulders continuation pattern also gave way in terms of momentum for that previous breakout. And over here, we can see price action holding near the 50 neutral zone. If you do manage to drop further below that, it can possibly confirm another leg lower for the gold chart, going at it level by level to avoid any bull or bear traps. And next up, we have the silver chart also holding a similar pattern to the rebound from the lows of February 2026 within an uptrending parallel channel. We're also holding an uptrending parallel channel here following the rebound from the lows of March 2026, facing pressure below the $84 zone. A clean hold above $84 would reinforce the bullish outlook towards the $90 zone and further back towards the 97 and the $100 threshold for silver, in line with the long-term bullish expectations on the gold chart. From the downside, a clean breakdown below the 78 mark would likely reinforce a short-term drawdown towards the bottom end of this uptrending channel between the 76 zone and the 75.50 for a strong support. A clean breakdown below this level would likely promote another a potential sell-off on the silver chart, possibly aligning with the 72, the 68, and the 64.80 previously respected zones. A breakdown below this level would likely reinforce bearish expectations where the 60 and 50 zone align with the steep bearish scenario on the gold chart. And last but not least, we have the NASDAQ chart, which is quite the star of the show with a steep rebound driving lots of speculation across the markets. Now, if we look closely at the weekly time frame, we did have a strong bullish hold near the 22,800 low that we reached for this year, with where we had a build up for bullish momentum and bullish signals, and at the same time, we also had sentiment bottoming over here with quite extreme headlines coming from both and threats coming from both Trump and Iran. And in terms of market sentiment, when it's that steep, it's usually a possible sign of a market bottom, which was later confirmed with a breakout for the price action back above the 24,600 zone and further in a steep manner towards the all-time records. Now, to be able to assess the next potential legs higher, I'm going to use also the Fibonacci extension tool, placing it between the lows of 2025, the highs of 2025 as well, and the lows of 2026, where we can see that the current price action is holding near the 38.2%, Fibonacci extension near the 26,650. A close above this level is likely to, now of course we can see some volatility towards the 26,700, yet a clean weekly close above the zone is likely to extend a bullish forecast towards 27,800 and the golden 618 near 28,900 to the 29,000 psychological threshold for another potential pullback risk on the horizon. From the downside, the short-term support, should we have a correction from these steep levels, would definitely be the previous highs near the 26,100 zone first, 26,300 to the 26,100 first, followed by the previously respected levels on the Nasdaq chart between 25,800, 25,600, and 25,200 respectively as short-term supports. Should we go lower, we can, in an extreme manner, we can revisit 24,700 and the 24,300 for another possible bullish rebound that can realign price action with the records. If not, we can revisit new lows back towards the previous highs extending between 2024 and 2025 near the 22,200 zone. These are my key charts in focus and key levels in focus for this week. Feel free to uh, ask any questions. If there's any chart you would like to see, I'm happy to go over these charts with you guys. I'm going to insert a 1-minute disclaimer and get back to your questions right after that disclaimer. Thank you so much for attending. You can find the recording of this webinar on our forex.com LinkedIn and YouTube handles as of today. Thank you for watching.